Hey everybody, thanks for tuning back into Crypto Mainly. I'm just going to jump straight into the content today. A nice little a pump from Bitcoin. We had a nice successful trade in the group. Obviously, when we took the breakout trade up to the 30,600, I was quite surprised actually to see the continuation. I was actually looking for a short position in this area, but of course I didn't take that position because we did break bullish. Above the highs of the candle bodies here. So once obviously we'd broken bullish from those candle bodies highs, I didn't actually take that short position. So some of you may be wondering why I was thinking about the short. And there is actually, if I just draw your attention to the CME chart, just be a little bit cautious here, guys. We looked, we've had a nice breakout. This descending support is a key one, which we'll come to in a moment. I'll just zoom out and I'll show you what I'm talking about. But this one here, we've come out, we've broken out, and we've got a retest, and we've bounced. What we want to see is we want to see these candle body highs being broken. If we start to see lower highs, and we get and we get this type of scenario where we've got lower highs here, then just be a little bit careful of that. We've not seen that yet, guys. But if we do start to see this coming up and creating lower highs, just be careful. If we do break down below that 31,200 area there, if we which would be the wick lows here. So let me just mark that on there for you so you can see that a little bit more clearly. Okay, so we've got the 31,200 there. Let me change the color actually so it makes it a little bit clearer for you. But if we do start to break below the 31,200 that you've got there, just watch for that, guys. Because if we do, then we'll likely see prices coming back down, and possibly even to retest this level in this region down here. Okay, and the reason I say that is because we've got the CME, we have got a CME gap at the bottom here, which is between 28,800 and 29,100. Okay, and if you look at this breakout, it would make sense that you get the rollover. It comes back down and retests. Having said that, this support here is very significant, and if I just show you what I mean by that, if we go to a 4-hour time frame and we zoom out, you can see that actually, that dotted line is this dotted line here, which is the peaks, if you like, the peak of the high at 65,000, at the peak of the valley. So join those up, and you can see that trend line is significant, and we have broken above that at the moment. So that's a good sign. But I just wonder, has the market got the strength at the moment for us to get the continuation that we need, or are we going to see this turning into like a topping pattern, and then the support break and prices coming down? I don't want to be on the face of things. We've broken out, we've retested, everything's looking really good at the moment, guys. So I don't want to sort of steal anyone's thunder, but just be aware if you do see closes below that 31,200, that we may see that the prices come back down. If we do, we'll likely see something like this where we get the lower highs, we come down, we may get some bounces from this key level here. Okay, we may get some bounces and then a bearish retest, and then we'll get the the actual move down to where the CME gap is. So just watch out for that, guys. Just be aware. That's one option, and of course the other is, as I said on yesterday's video, the key level to watch is 31,820. That's this dotted green line here. That is a key weekly, acting as resistance at the moment, but it was support for a long time, and now it's acting as resistance. And it would make sense that we get a strong rejection from a weekly key level. It would make sense to me that this doesn't quite play out just yet, and we get a move to the downside before we then get the bounce and then the accelerated move to the upside. So just watch out for that, guys. As I say, let's have a look at the CME chart. So this is the CME. I will also say that we have got a rather larger, juicier gap above, as you can see there. So if we go to a daily chart, I can show you on a daily. Looks a lot clearer on a daily, but you've got a huge gap at the top there between just the high of the gap, if you like, is just under 36,000. So there is that rather juicy gap waiting for us to accelerate up and fill. So that will be nice and something which is likely to happen as well in the short term. But I just think just be aware, guys. There is a gap below at the moment. There is a gap above us. We are up against strong weekly resistance at the moment. Things look like that things are actually sort of bouncing along nicely between. If you look at the highs here, we haven't actually broken the candle body highs on the left on the left side here yet. And in addition to that, you've got the key level at 31,820, which is a weekly level. In fact, what I'm going to do is I'm just going to pop that onto this chart as well. Okay, so just pop the that key level on there as well, 31,820, which interestingly lines up nicely with the highs of this range here on the left hand side. So yeah, a critical level. We're bouncing along the bottom of it. We haven't broken the highs yet here. So don't be surprised, guys, if we do come back down just to fill in this gap at the bottom. This will be the trade that I'll be looking for. Any candle, any close below 31,200. So what you'll see is price will come down. If it's going to come down, it will come down, break down below, come back up, and possibly test the entry level there at 31,200, and then obviously you'll get the entry, and then then obviously continue to the downside. So something similar to this, what we can see here on this chart, as I pointed out before. We'll get, if we get the sort of lower highs coming in, then we break down. It would make sense we bounce from that, retest that significant line as a bearish retest, and then pop down and actually fill in the CME gap. That would make sense to me. So just watch out for that, guys. The flip side to that is, of course, if we break above that 31,820, if we do see the price coming up, we start breaking the highs, we have a breakout, and then we come back down and retest the 31,820, and then take off. That will be fantastic news. If that happens, I'm sure that it will happen in time, but I'm not sure that it's going to happen now. I think we'll see downwards first, and then we'll come up and have another attack at this weekly resistance. But if we do see this, and this is what we're looking for ultimately, is a breakout of that 31,820, and then for us to come down and retest it as support, and then things really, that on a macro scale, that really does turn things around, and will look really promising and very bullish for the future for Bitcoin. So that would be great to see that. So just to summarise on a couple of charts that we've been looking at over the last couple of months since the channel's been going, we stayed as suspected in that little small the little small blue triangle that I was talking about. And as you can see now, if we zoom in, we are just going to try and keep some of that information on the right hand side in this. You can see we've actually broken out of that descending support line, which is the same as this one basically, but on a different chart. You can see we have broken above it. The green dotted line there is the 31,820. That's the weekly resistance level. And again, you can see that we've come up against it, and we haven't rejected very strongly from it yet, but we are battling away at the moment. And the longer that we sort of stay around this region, the more likely is obviously that we'll come back down first before the next try. The CME gap, incidentally, is in this region here. So it would make sense. I mean, it wouldn't be disastrous if we look at that sort of. You've got like a, descending resistance line here. It wouldn't be too disastrous if we did come down, fill the CME gap, and then we start to take off from there. That would actually make sense to me. So as I say, guys, watch out for both scenarios. So yeah, interesting to see. We've got the target zone at the top there. That's based on obviously the bull market support band being within around about the sort of let's just have a quick look, see where it is on this chart. Put it back to the weekly. I'll pop the bull market support band on there. So between 31 and between 38,100 and 38,400. So yes, so somewhere sort of low 38,000 is where the bull market support band is currently. So hence the reason I've put this little target zone here. It would make sense, as I've said previously, is that we eventually make our way to perhaps just above the bull market support zone, and then at that point watch out for where the 200-day moving average is, because that will be critical at that point. When we're above the you can see it coming down now here. It's actually at 42,650. So the orange line, which is coming down here now. Just watch for that, guys. So I think we're going to get above the bull market support band. We'll bounce beneath the 200 moving average, maybe even a couple of stabs above it, and then we're going to be. I think we'll roll over towards the end of the year, as I've said many times in the videos now. So this was just another chart we've been looking at for a while. So this is just really a summary again. I mean, it's interesting to see, this Wyckoff pattern that's here. Starting from the PS point here. You've got a high, which will be this high. You've then got SC at the bottom. You've got the AR at the top there. The ST, I think, is this shallow part of the range here. And then obviously we've got the sort of the valley, if you like. And then you've got the big try, the big hump in the center, which is clear, which is obviously just move that across a bit, which is this part here. Okay, and then obviously the spring part is obviously, you can see that there's these on this the Wyckoff chart, you've got lows, lower lows, and lower lows, and obviously it makes sense now looking back that you see that this deep wick is the spring. The only thing is, as I've said before, guys, is that if we look at the previous Wyckoff on this side, when you get deep wicks like that, you do tend to get retests of those lows of the range. And although this is on a smaller scale, don't be surprised to see that, guys. We could still see some tests down, to the lows of this range. The bottom dotted line there is the 28,800. So it says actually 28,754 there, but 28,800 for round numbers is the very low there, and we don't want to see candle body closes below that on a daily time frame. 28,800. If we do start to see closes below that, having had this bounce, if we get all the way back down there and see candle body closes on a daily time frame below 28,800, then we really need to start to be looking at the low 20s again. But as I've said, from the last 2 months that my YouTube channel's been going, I just think that we are going to see a nice alt season. It's not going to be a fantastic one like we've seen in the run up to 2017 December. It's not going to be anything like that, because obviously the dynamic of the market's changed with what we're having stable coins available now, and the number of altcoins that you've got to choose from now. The market, although there's a lot more money in the market, it's also very much more diluted, and you have the stablecoin market. So I don't think we'll ever see an alt season like we did in 2017 again. But having said that, we will see some nice altcoin action when Bitcoin is making positive moves. We have spoken actually, incidentally, about the Bitcoin Ethereum chart, which I'll just bring up. So we've looked at this in a few different ways, recently in the recent videos. Okay, so what we've been saying. I'll change it to a 6 hour. Sorry, getting in the right place for you. So yeah, so what basically I was saying is that if we do get, if this does start to roll over and come all the way back down and starts to get deeper and deeper, we could still get the the nice positive action from Bitcoin, but that would then be fueled by altcoins being sold into Bitcoin, which is would mean that the altcoins do badly in their Bitcoin pairing as Bitcoin price goes up. I mean, if that does happen, then altcoins are likely to bleed against the Bitcoin valuation, and probably not do particularly well in the USD valuations either. But I think more likely what's going to happen. So there's two options basically. If this comes to the downside and starts to collapse downwards, then then the altcoins will be being sold into Bitcoin, which will be creating the Bitcoin pump. The other option, which is what I said about in the last couple of days, I've mentioned that I'd like to draw a clean chart from time to time, and this is a chart that I've been looking at for a long time now. But if we'll come to the clean chart again in a second, but I'm expecting to see something more along the lines of if I just redraw that for you. So yeah, I'm expecting possibly to see something like this, where we see some kind of sideways action here, and then up to the then have a bearish retest, and then possibly come down. But the longer that we're in this region here, the longer that we're in this region here, this could be what creates our alt season, being in this range here. And if I just show you the fresh chart, and it's actually clearer on there, of what I'm trying to show you. But we've been looking at this chart for a long time now, so it's better that I show you the original chart, so you can see how things have evolved, rather than just change the chart dramatically, and you just wonder what happened there. 1 minute we're looking at one chart, and then you get a completely different set of readings. But this is basically this same pattern. So the Ethereum Bitcoin valuation, it's the same pattern. It's the same. Okay, but you can see actually quite clearly that there's a low range, a mid range, and an upper range. And in fact, interestingly, what I've done, as you can see, is I drew the fib in the center there, and from the candle body low to the candle body high, you can see that the 50% is exactly in the mid range. So another, that's another supporting argument that actually this could be just one huge consolidation sideways range. And we may not have actually broken down from a rising wedge type scenario. Technical analysis is down to a certain amount of interpretation, but you can see here, this would make sense to me, because this range that I'm talking about here in this blue box would be this range, this mid range here, as I'm sure most of you will already know, but some of you that are new, I'll just point that out to you. So, that range is actually going to be, sorry, let me just move that to the top there. So as you can see, we could be in this range, which is, the equivalent of this range here, basically. Okay, so on a fresh pair of eyes, it would make sense that, we're getting the bounce already. We may come down and retest the lows again, similar to what we did here. But as some of you will know, I was talking about, this scenario here, where I lost sort of a bit of hope in the market here, okay, and felt that perhaps, my Wyckoff theory for this area here was wrong, and actually we were going to continue lower. And actual fact, if you look at the date on this one, it's the 20th of July. You can see at the bottom of the screen. And if we look at the date here, the 20th of July is somewhere in the center here. So if you look at the bottom of the screen again, you can see the date there, the 20th of July. Okay, it is here. So this is where I was losing hope in the market here, in July 2021. And yet, if you look the same region here, the highs and lows are exactly where we're bouncing from now. So we may get some bounces like we did here. So similar to this pattern here, we may still get, some kind of consolidation areas here, and then up into the range. But once again, if you look at this, and then we look at this, it's a similar scenario where we end up coming up to the, just basically to the mid range, and then roll over towards the back end of the towards the end of the year again. Similar to what I've been saying in my videos, where I've done a comparison basically on the cycles, and where I think we are in the actual overall cycles on a macro scale, on a larger scale, sort of weekly and monthly time frame. But yeah, I mean, guys, so in summary, let's just go back across this. Watch for lows, watch for lower highs, and then a break below 31,200. If that happens, it's very likely that we'll see this trade will come into fruition, and we'll come down and fill in the CME gap at the lows, retest possibly this breakout level, and then obviously, we'll then make some moves higher. Again, this level 31,820 is the key one to watch for. We're looking for, this is the ideal scenario at the top here, where we close above 31,820. Wyckoff looking like it's coming along nicely. This would suggest that we will get some continuation gradually, but just bear in mind, as I said previously, from this low point to this high, so from this low to this high at 69,000, this was a 4-month period. Okay, so we could, when we use the words like spring, we expect to see a sudden bounce, and in actual fact, this took 4 months to get from 29,000 to 69,000. So we could have 4 months of gradual upward action. It's possible. And as I said yesterday in yesterday's video, if we trade what we see on the charts, which is critical, you must trade what you see on the charts. It's really important to do that. This is a huge rising wedge, and the measured move from this, if we get the breakout above this top dotted line, is the top of the wedge, which will take us up to new all-time highs. And that is a possibility. This pattern is very valid. So you've got to consider all of the options, guys. But I will be here giving you videos, daily, and trying to keep you updated and try and guide you along. Yeah, lots of interesting things, guys, and I think you'll agree that the market is looking like it's turning around, and going to be positive. If we do see the closes and we do get the lows around and close this bottom CME gap, I wouldn't be too worried about that. Actually, I think that would actually be quite healthy to get that gap closed now, and then obviously get the pushes higher after that. So the two options to watch are these. Don't be too disheartened if we do come back down to the bottom of the range again. It will be normal to see that. And I still think that we are going to be in for the next few months. The summer, I think, is going to be an interesting time for Bitcoin, for cryptocurrency, and and the altcoins. Okay, so I'm just going to leave you with that. I was looking on Twitter a short time ago, and I don't know what you make of this, guys, but this is something that Elon has posted a couple of minutes ago. Just interesting to see that there are a couple of references to trades here. For example, Amazon, Facebook, Twitter. There are a number. I believe is that TikTok in the middle there. That might be TikTok as well. I don't know. It's almost like he's suggesting, look, here it comes. June is almost here. Here it comes. A whirlwind of activity. Positive price action, and Elon does tend to have some kind of magic powers as far as that's concerned. But let's hope for that, guys. Take care now. All the best. Always remember, take profits and buy something real. And I look forward to speaking to you all again tomorrow. Thanks for listening, guys. Take care.